Breaking news here on Martyn Lucas Investor. I've got Jong Lee on the phone as well. We're talking about a Santa rally, a little bit of a ripple on the pond going up to elections, the election period, and then rallying again. It's exactly what I've been saying for the longest time. I'm not selling anything. I'm very bullish. I'm very confident. And I've got a reaction video here. It's just come out. No one's got it yet. This is brand spanking new. I'll be the first person on YouTube, I'm sure, to get this. So you're in the right place. If you tap the like button, and it's the only place you're going to get me to react to it, let's be honest. All right, click subscribe and ring the bell. Have you done all that good stuff? All right, let's hear. It's just in, hot off the press. No one's got it. Here it is. Very exciting moment.
Lee. He's FundStrat's head of research, a CNBC contributor, live with us once again at Post 9. Nice to see you.
Great to see you, Scott.
Since the Fed did their jumbo cut, the market really hasn't done all that much except for one day last Thursday. Why?
Well, I think the Fed unleashed us on an easing cycle, and that's going to be positive. We know it's actually historically positive 3 months, 6 months out. But what stocks do in the next month is a bit of a coin flip, and I think that's what we're seeing because there's some repositioning that took place. And also we're now thinking about the 40 days into the election.
So does the fact that the election is but 40 days away sort of...
Now, I'm going to make some predictions. I've not seen this yet. This has just come out. This has only been released on CNBC a couple of moments' time, but I'm going to make my thoughts, my beliefs first. Let's see if he aligns with me. I'm making this live, remember, so I don't know what he's going to say. I haven't seen it yet. So my experience is markets often rally after elections, and when we've had a decent rally already. We've had a great year so far, so I'm expecting another 10-20% by the end of the year, which would be phenomenal. Absolutely great. Let's see if he says that. I also believe that we're going to have a sideways action for a while, bit of volatility. I'm not concerned about the war. I'm not concerned about any of that at all because we own the right stocks. I hope he talks about the Russell being junk and you should be out of it. People will buy it and then pump it and then dump it and then come back to the mega caps. He might say the mega caps should be sort of sideways. They'll follow the market, but then they'll rally later on in the year. And I expect a Santa rally. I honestly have not seen this yet. This has just come out. It just got posted onto YouTube a couple of seconds ago. Let's see if any of that makes any sense. I am glad to see already the Russell is down by 1%. I've been telling everyone, stay away from the Russell, absolute junk. Don't bother with that. I know people won't listen. They'll take profits and they'll try and if you work it all out, end of the year, you've made less money. Anyway, let's go over to Tom, see what he has to say.
Ruin the perfect scenario for stocks to get that post-Fed bump?
I think it delays it. Just because, in the conferences that I've
sideways for a month
speaking at and seeing wealth managers and family offices, a lot don't want to commit capital until after election day, and I don't think it matters who wins. It's just they want to get that event behind them.
Oh, so you think we're going to have sort of a dash to the...
I agree with that. Remember, he just said doesn't matter who wins. I've been saying that the entire time. I believe the markets are strong enough. They don't care who wins. It makes no real difference who wins. I agree with that.
Finish after election day is out of the way.
Yeah, and that's pretty typical. In fact, in election years, the November, December rallies are pretty tremendous. And in fact, when markets are up more than 10% in the first half, you also get big rallies November, December.
There you go.
Choppy through September.
You think investors are sold on the idea?
What do you reckon about that? I think Jong Lee should work for me, or I should work for Tom. What do you reckon? Or we should become partners. We should do a YouTube channel.
The idea that this economy is going to make it. It's going to make it through. The Fed's going to pull this off. Is any of what we've witnessed since Fed Day doubts about the bigger picture?
So far, so good. This Friday, we get core PCE, and hopefully that confirms inflation is no longer on the front burner. But I'd say one thing I've noticed is that the number of investors and professional money managers that think we're already in a recession is very high. And so I think the evidence just has to...
How many times have I said that? You won't know you're in a recession until you look back 6 months. He's now saying some people believe we're already in a recession. Recession is the bottom of the market. You don't know you're in a recession until you've had 2 or 3 quarters to measure it by. So this is why I'm always about investing and looking forward, not looking backward like the Fed do. Very, very important to understand that. But if we are in a recession, if we're in a recession and we've slowed down, this is the bottom. This is the time to be in. So Tom's doing good today.
To be better than expected, and I think those views shift back to
teach him everything he knows.
Well, we've seen, recently targets for the S&P. Brian Belsky, I keep bringing him up because he's the most recent to raise his target up to the highest now on the street. I've asked you about, the market lately. You haven't sounded like you'd be raising your own target to a degree like that, would you?
I think there is a lot of upside in the foreseeable future. Let's say 3-6 months out.
Perfect.
But for someone to tactically say we need to pin a 6,000 target and then put money to work today, I think it's harder to make that case because valuations aren't on the cheaper end, and we've already had a fairly sizable move. So I'm not saying I'm bearish right now, but to me, I'd have a lot more confidence saying 3-6 months out, things are attractive, especially things like margin debt, right? It actually decreased in August, meaning investors have been deleveraging. Mm-hmm. It hasn't gone anywhere for the last 4 months at a time when markets are rising.
I guess my point would be, it would have been better articulated to just say, you don't sound as bullish as you usually are. Is that fair?
Yes, I'm bullish into year end, but I'm a little less confident about how markets behave into election.
There we go. Tom Lee, very much aligned with my sort of methodology in investing. He's an investor, not a trader, and perfect. 3 to 6 months out. That's what we want to hear. That's what we want. We want to be accumulating, paying down margin so we can release more capital, we can buy more. As I'm talking, the markets are rallying, they're going back up again. It might even turn green in a minute with a last-minute rally. Very, very nice indeed. This is good. I like it. It's exactly fitting into my strategy. By the end of the year, we start picking up again. I produce some margin. I can start to buy more if we get a dip. And I do expect a dip. I do expect one final little sort of flush out before we get the post rally from the election.
And not that I think we're going to have a huge drawdown. If we do have a big drawdown, I'd be buying that dip. But I also don't think we can make new highs and then see the market blast off after Election Day. So I'd rather say things look a lot better after Election Day.
Can we make new highs if tech doesn't resume its leadership role in anywhere close to the degree that it had?
As long as tech is a market perform. If tech actually declines, that's going to be hard for the rest of the S&P 500 to compensate. But what we've seen so far, including days like NVIDIA and Tesla recently, is that tech is actually holding its own, but other stocks are starting to show catalysts and signs of life.
Yeah. What about the broadening trade? I mean, you look at the Russell, your big call, of course. Week to date's down more than 1%. Really hasn't done much at all. I kept hearing, hey, you got to wait till the Fed cuts. Then you go into the Russell. I don't know. What do you think?
Well, Russell had a big week last week. It's some profit taking now, but I think that there's...
Makes sense.
This is what bottoms look like. I don't think bottoms are straight up. I know in 2021, energy was bottoming, and it was also very choppy, but eventually made not only new highs, but then basically had a blistering gain in 2020, in the year following. So I think that's a multi-year start for the Russell. It feels choppy, but we're still near all-time highs, and there's a big fundamental case to own small caps.
Some have made the case that there are a lot of areas of the market that are overcrowded at this point. So many different sectors have gone up a bunch. You look at industrials and utilities and other things that have traded near or at highs. Therefore, they find better value in bonds. What do you think?
I think a bond investor is buying a bond for a different reason than buying an equity. Because an equity gives you not only inflation protection and benefit from falling yields, but also capital appreciation and positive surprise. Bonds rarely give you positive surprise. I think a bond investor someone should have some income with some capital upside there, but there are so many good opportunities. And, the fact that China has started to actually perform better and potentially broken out, that's again a breadth signal, because that's been a big drag for the last few years.
Oh, how about that? Do you feel like the move that happened in China this week's a game changer on how we should view what, the potential turn in their economy means for the overall markets? I mean, we've seen certain stocks get a nice boost. Some of the luxury goods companies, right? LVMH, Estee Lauder, et cetera.
And the gaming stocks.
What about in the bigger picture?
It's hard to tell what's a trading rally versus a bottom for China. I spent some time talking to Mark Newton, our technical strategist. He thinks this is a bona fide breakout, and it is coming on the heels of not only stimulus, but in the face of unrelenting bad news for China. So to me, a rally on bad news
Correct.
is a sign that maybe the worst is already priced into China, and that means it could rally for a while.
All right.
Exactly. That's exactly what I said. I do believe that we're going to get a 7-day streak of this. Then we're going to go sideways for a while, and then it's going to push a bit higher. But no matter, I would not be buying it. What it will do, what I'm looking for it to do, is not encourage me to buy Baba and all the rubbish that comes out of China. What it does for me is it'll encourage people to start investing again, because if China does well, it's good for the whole world. We don't want economies collapsing. That doesn't help anybody. We want people in China to make lots of money and be wealthy. They can buy those Teslas and all the rest of it, and it encourages people to invest over here even more. So, just like Mr. Beast says, as I have always said, don't try and be an island. You want everyone to climb with you, everyone to grow with you. I've always said, share the news. This is why I promote other people's channels. I'm always trying to get you to watch other people's channels. We all grow together. Just be the best and concentrate on providing value and service. And the economy is exactly the same. Focus on the bigger picture and we all do well. When one does well, we all do well. No one gets left behind. That's not what we want. We want everyone to grow together. So there we go. There's my reaction to Tom Lee. Great, because it's pretty much everything I feel myself. And as I said before at the beginning of the video, I had not yet seen it. I was waiting for it to post on CNBC. And the moment it did, I knew that was coming out. I wanted to grab it. So I'm really, really pleased we were able to get that. So there you go. Click above my head for all the links down below in the description. Leave me your thoughts below. Are we going to get a Santa rally? Yep. Are we going to get a post-election rally? Yep. Is the S&P going to go up 3x by the end of the decade? Yep. Am I going to get to $1 million by the end of the decade? Yep. Without buying any more shares? Yep, absolutely right. Just watch me do it. All right, click above my head, down below here. Over here, I'll put another playlist, which I think you'll find useful. And down here, I will put my Psychology of Investing Part 2. It is the video all about cash is not king. You need to go and watch it. Very, very important. I've got Tom Lee live on the phone. Very, very funny. I can't let you into the show unless you are on camera, and I don't see anybody on camera, so I'm very sorry, I can't let you on the show. Someone's trying to be funny here in the last few minutes. You may have heard that. You may have heard the tone, but I'm not going to let you in. You're not on camera. So there you go. Until next time, as always, great year coming. For investors, it's great. For traders, it's always difficult. Until next time, as always, take care of yourselves and each other.